In this video, I'm going to share with you a simple strategy that you can use to trade during your intraday trading sessions. So this strategy is easy to follow and is easy to use. So if you're a beginner trader and also if you have a small account, then this strategy might also help you. But just for a disclaimer, trading is risky and most beginner traders actually lose money. So be careful when you put your money on the line. So for the strategy, we are going to use two indicators and we are going to try and get some reversal trades. The first indicator that we are going to use is called the VWAP indicator. So we go to indicators and then we are going to find the VWAP and then add it to the chart. So this indicator is called the volume weighted average price. It works mostly like the moving average, but the difference is that the VWAP combines the volume and the moving average. So what it does is it moves closer to the price when the price is ranging, and when the price starts rallying then and the volume increases, then it will also move apart from the price. Okay, so we have something that looks like this. So our goal is to take the trade before this happens. Okay, so the next thing that we are going to do is we are going to add the RSI indicator. So we go to indicators, find the RSI and then we add to the chart. Now on the settings we have to change something. So first we are going to set the period to 14 and then the color to blue. Now go to the levels and then we are going to set two levels. First we are going to set the level 60 and then we are going to set the level 40. So we have the level 60 and the level 40. Once we have this, we are just going to save. So once it's added these two indicators, you have to have the chart that looks like this. Now, here's how you place your trades. We are going to start off with buy trades. So I'm going to show you an example, okay? So to buy, first we have to look for a few things. First, we need to look at the RSI and we need to find the RSI crossing the level 60 going up. So if the RSI is crossing the level 60 going up, this is going to show you that the market is building momentum, and most of the time it will keep moving up until it goes all the way to level 70, level 80, where most people are going to consider it overbought. So once we see this happening, the market crossing above level 60, we are going to look at the price and the VWAP. As I said, the VWAP doesn't follow the price just like what the moving average does, but the price will mostly move closer to the VWAP, or the VWAP moves closer to the price, and then if the market starts rallying, then the price is going to move away from the VWAP. So what we want here is for the price to be just above the VWAP or close to it, or just crossing the VWAP. So we want to see no big gap between the VWAP and the price, and then we want to also see the price being above the VWAP. So here's an example. Here we have the RSI crossing the above level 60 right here, and then we can see that the price have just crossed the VWAP going to the upside. So when this happens, we are going to buy when the candle closes that crosses, but if the market is already above the VWAP, we're just going to buy on a green candle. What we do here is when we buy a trade right here, we are going to put our stop loss just below the VWAP or below the candle that crossed the VWAP, if it is the candle that crossed the VWAP, right? So our stop loss is going to be close. And then for our take profit, what we want to do, we are going to look at the behavior of the market, right? Mostly the price will move fast and then it is going to go away from the VWAP until it reverses. But if before it reverses, we want to hold our trade, and then we are going to be looking at volume and volatility, right? So for example, if you see the volume increasing and then the market also moving up, then that means you are still safe. But when you start seeing the volume start to decrease, right, and then the market is now not in line with the volume. So let's say the market is still moving up like this, and then the volume is starting to slow down. Then this is where you want to start getting out of the market. If you want to make it easy, you can use 1 to 2, 1 to 3 risk to reward ratio. So whatever you are going to use as your stop loss, you can just use 2 times that or 3 times that as a take profit. Okay, now let's recap and let me show you a sell example. Okay, so for a sell trade, right, we want to see the RSI moving below the level 40. Now Once we do this, we are going to be looking at the price. We want to see if the price have just crossed the VWAP going to the downside, or if the price is already below the VWAP but it is very close to the VWAP indicator and it is below the VWAP indicator. If you see this, we are going to place our sell trade on a red candle and on a close of a red candle. We are going to put our stop loss above the VWAP or above the candle that crossed the VWAP if it is a crossover. And then we are going to put our take profit just like we did with our on a buy trade. We also want to look at the behavior of the market. If you can't find anything, or if you are not able to look at the behavior of the market, what you want to do, what you want to see basically is that if the market is creating big candles and going to the downside, the volume should also be increasing, showing that there is more demand of that, and showing that there is more people willing to sell at lower prices, right? But as soon as the volume starts to slow down, or as soon as you get a candle with a very small body and then a huge volume on it, which means the volume and the body of the candle is not aligning, then you want to get out of the market, or you can use 2-to-1 or 3-to-1 risk to reward ratio. So that's the strategy. Go ahead and test it on your demo account first before you use it on your real money. So if you want to get trade ideas and signals potentially, check the link in the description below, and I'll see you in the next one.